Imagine earning a steady stream of passive income from some of the world's most iconic skylines without ever lifting a hammer. This isn't just a dream, it's the power of Asian REITs in 2026. Asia's real estate market is entering a new era. As global interest rates begin to stabilize, the continent's megacities are once again becoming the engine of global wealth creation. REITs, or real estate investment trusts, are required to pay out at least 90% of their taxable income to shareholders. It's the ultimate vehicle for monthly or quarterly dividends. In 2026, we've moved past the defensive posturing of recent years. We are now in a sweet spot where financing costs are easing, allowing these trusts to recycle capital and grow once again. While the whole region is growing, three markets stand out as powerhouses: Singapore for its stability, Japan for its tourism and inflation shift, and India for its explosive technology infrastructure. Starting our list at number 8 is the giant of Singapore, Capitaland Integrated Commercial Trust, or CICT. They are the primary proxy for the nation's commercial real estate market. For 2025, CICT reported a strong 6.4% increase in DPU. Their performance is underpinned by rental reversions of nearly 7% in their Grade A office and retail assets. Management has been exceptionally disciplined, maintaining a cost of debt at 3.2%. This allows CICT to remain aggressive in a world where capital recycling is king. If you want a stable, highly liquid, and diversified entry into the Singapore market, CICT remains the cornerstone asset for any serious Asian portfolio. Coming in at number 7 is the tech infrastructure play, Keppel DC REIT. In 2026, the global economy runs on data, and Keppel owns the warehouses for that data. The explosive demand for AI processing and cloud computing has pushed Keppel's distributable income up by 55%. Their 25 data centers across 10 countries are fully utilized. Because supply is so limited, Keppel is seeing rental reversions as high as 45%. In 2026, they are bringing Tokyo Data Center 3 online to capture even more of this high-yield demand. Keppel DC isn't just a real estate play, it's a technology infrastructure play. It offers high-growth potential that is almost entirely decoupled from traditional retail cycles. At number 6, we head to Japan with the Nippon Building Fund. This is the dominant force in Tokyo's prime major 5 wards, the heart of Japanese corporate power. Leasing demand in Tokyo remains incredibly robust. For the first half of 2026, NBF has raised its profit forecasts by 25%, driven by strategic property exchanges and higher yields. For the first time in decades, Japan is seeing entrenching inflation. This allows NBF to pass through costs to tenants and finally raise rents in the world's largest metropolitan area. While Western office markets are struggling, Tokyo remains a global outlier. Nippon Building Fund is the most direct way to own the world's most stable office market. Number 5 is Asia's largest REIT by market cap, Link REIT. They are currently executing a massive pivot away from Hong Kong through their REIT Plus model. By 2027, they aim for 40% of their portfolio to be outside Hong Kong, targeting high-growth areas in Australia, Singapore, and mainland China. Their focus on non-discretionary retail, the things people need every single day, provides a defensive floor that few other REITs can match. Analysts are projecting a 6.5% yield for 2026. Link REIT is a classic value play. With its regional diversification strategy now bearing fruit, it offers size, stability, and a very attractive dividend yield for 2026. Coming in at number 4 is the ultimate defensive anchor, Parkway Life REIT. They specialize in healthcare, one of the most recession-proof sectors on the planet. Parkway Life is legendary for its stability. They have grown their dividends steadily for nearly 2 decades, maintaining a perfect track record since their IPO. Their master leases in Singapore extend all the way to 2042. With guaranteed step-up rent escalations, your income growth is literally written into the contracts. Beyond Singapore, they own over 50 nursing homes in Japan and have just launched their third growth pillar in France, further diversifying their healthcare footprint. If you want a REIT that protects your downside regardless of economic cycles, Parkway Life's healthcare portfolio is the foundation your portfolio needs. At number 3, we capture Japan's tourism explosion with Japan Hotel REIT. Tourism in Japan is back, and it's breaking every previous record. The strategic acquisition of the Hyatt Regency Tokyo is a game changer. It's projected to drive a 15% increase in net profit for fiscal 2026 as room rates continue to climb. Total revenue is expected to hit 101.9 billion yen this year. With a 13.7% increase from previous guidance, this is one of the strongest momentum plays in Asia right now. Japan remains one of the world's top travel destinations. Japan Hotel REIT allows you to profit directly from every tourist checking into a prime Tokyo hotel. Our runner-up at number 2 is CapitaLand Ascendas REIT, Singapore's largest industrial and logistics giant. They are the backbone of the region's supply chain. Even during economic uncertainty, Ascendas achieve positive rental reversions of 12%. They are seeing 100% occupancy in several of their key data center and logistics hubs. Management is masterfully recycling capital, selling older U.S. assets at a massive 45% premium to fund the development of cutting-edge science parks in Singapore. In a supply-constrained market like Singapore, owning the premier industrial and logistics hubs is a license to grow. Ascendas is the undisputed leader in this space. And finally, our top pick for 2026, CapitaLand India Trust, or CLINT. This is where high-octane growth meets Singapore's regulatory excellence. CLINT is riding India's tech wave. They've achieved rental reversions as high as 39% in Hyderabad, a growth rate that is simply unheard of in more mature markets. They are aggressively expanding their data center portfolio while optimizing their capital structure. By onshoring debt, they've boosted their dividends by nearly 4%. CLINT offers the perfect combination of India's high growth and Singapore's financial transparency. It is our absolute top pick for portfolio growth in 2026. Looking ahead, 2026 is defined by falling interest rates, Singapore's new market reforms, and Japan's historic shift away from deflation. The macro wind is at our backs. A winning strategy for 2026 is balance. Mix the defensive stability of Parkway Life with the high-growth potential of Keppel DC and CLINT to maximize your total returns. Getting started is easier than ever. Most of these REITs are listed on the Singapore or Tokyo exchanges and can be purchased through any major global brokerage. As always, remember that all investing carries risk. Diversify across different sectors and geographies to protect yourself against regional economic shifts. The real estate giants of Asia are building the world's most dynamic cities. In 2026, you have the chance to be more than just a bystander. You can be an owner. From the tech hubs of India to the grand skyline of Singapore, the future of real estate is being written right now in Asia. Whether you're seeking stable dividends or long-term capital growth, the Asian REIT market has an answer for every investor. Don't miss out on the greatest real estate growth story of our generation. The time to build your Asian portfolio is now. If you found this 8-minute deep dive helpful, please give this video a like and subscribe for more expert insights. Your prosperous 2026 starts today. Thanks for watching. We'll see you in the next deep dive. Happy investing.